Hey everyone, this is Ryan B with Practical Forex Trading, and this is your weekly analysis for the Dow Jones Industrial Average, otherwise known as the US 30. Top 30 stocks make up the Dow Jones Industrial Average, and people use that as a main leading economic indicator. If you want to stay up to date with all of our Dow Jones videos and other currency pairs, make sure you click that red subscribe button. Okay, so sentiment bearish, meaning more selling ahead likely. So let's go ahead and talk about the why. These are weekly candles. This is a weekly chart. It means each one of these red or green candles are called represents 1 week of price action. Let me go ahead and hide this right now. And what that tells us is that the market opened at 22,842 and finished at 19,027. We've had 1, 2, 3, 4, 5 consecutive weeks of heavy selling now, bringing the index from close to just about 29.5 to 19,027, shedding about 10,000 points in that average. Some good news ahead. We've got support right around the 18,000 mark. So we go ahead and look back to 2015, 2016, 2017. The market capped, right? It kind of would reach that point and then shy away, come back, tested it again, finally was able to break through in late 2016. Now we've seen that price, after moving up to 29.5, has erased all of its gains since that point. But the good news is that what used to be resistance or the ceiling is now the floor or support. So a couple things can happen. We could see price keep declining towards this line, plunge below it, and then we really want the body of this candle to close above the line. Here's a similar scenario right here, where price plunged below, right, 20,000, then came up here and closed above 22.5. So when we think about support holding, call it holding support, even if price were to plunge below it, but the body of the candle stay above here, it's a really good sign, meaning there's enough buying there to prop up prices. If support at 18,000, this area, were to fail, then we look for the next line of support at 14,000, which takes us back to so pre-2008 levels, right? So the peak of the market in 2007, before it crashed in 2008 through 2009. Really, when you think about those movements, it wasn't just one market sell-off. It was really, when you think about 2008, right? Most of that sell-off happened over the course of a year. It was quite a long time. So now we've only been going for about 5 weeks. Eventually we're going to see what's a bounce, right? So a bounce will probably be, I would guess, based on traders' actions around that 18,000. Let's go ahead and draw a trend line just to get a good idea of where price is. So we see over time that this line gets tested, right? Price set on top of it many times. So we think about our next big plunge sell-off with a buy. It could be right around here, right around 16.8. Let's go ahead and map that out. Right, we could see price coming down in here, which might make a great buying opportunity. We also see, just like we talked about the fast-moving average, whenever price moves too far away from the fast-moving average, at some point it needs to recoil. And then we can think about using our Fibonacci tool to tell us where would that retracement point be. However, first we need to get a defined bottom, and we haven't seen that. We've just got a giant bearish candles. I think we're going to see more selling in the week ahead down to at least this 18,000 level. Let's go ahead and look at the daily. So we see very, very bearish candles, meaning everyone's selling off their holdings, probably putting them to US dollars, right? US dollars are now crushing the market, and you can see some of our other videos we talk about the strength of the US dollar. So there's a lot of selling and people putting money into bonds because the US is the world's preferred reserve currency, the US dollar. So things go bad, people put their money into the US dollar. Okay, We see this bearish candle, look for more selling in the days to come. Might find a good buying opportunity, 16,000, but because this is an index, it's not based on one single stock. It's more about the state of the market, so you really have to gauge fundamental events. What will be happening with world markets that would give people a reason to buy in stocks, besides the traders, but what would give the mass markets the purpose. Don't try to float the market all with your own account. Don't try to be your own whale and like move the account because you bought X amount of stocks. It won't work. Even central banks have tried that. It won't work for an extended period of time. So we're going to wait for the selling to taper off and prices to even out. So look for the fundamentals to even out and prices to start settling down, finding support, right? Which means they'll keep testing the low and then unable to go further down. We want to find, so don't try to guess the low. Never try to guess the bottom of the trend. Never try to guess the top because you're typically wrong. So it looks like more selling ahead. I would stay on the sidelines until we get some more support. Okay, everyone, hang tight, stay safe out there. We'll talk soon.